So I think that basically this is kind of a pent up move from those overall better liquidity conditions. I think the somewhat concerning thing is that you're also seeing a bounce in like meme stocks
Mhm.
and unprofitable stocks this year. And so, I wouldn't be surprised to see some of this be given back or some of this, consolidate for a period of time. But essentially, I think that, liquidity, at least locally, reached its worst point last year, and at least is kind of a mild, improvement.
Over the past week, the cryptocurrency market has had multiple impressive rallies. On Saturday, Bitcoin, the world's largest cryptocurrency by market cap, shot past $23,000, a 5-month high for the leading crypto asset and its highest price since the FTX collapse. Other top crypto assets, including Ether, Cardano, and Solana, are also slowly gaining momentum and seem to be leaving the FTX bloodbath behind. The most recent rally, which also shot the overall crypto market cap above the $1 trillion mark, is even more impressive given that there has been some FUD surrounding crypto lender Genesis, which has finally filed for bankruptcy protection. Regardless, Bitcoin has gained more than 9% in the last 24 hours, while Ether is up by 5.79%, according to data from CoinMarketCap. The ongoing rally has caused several heated debates among top investors and analysts on Twitter. Some analysts and investors are adamant that this is just a bear market rally and not the beginning of a bull run. On the other hand, analysts like Plan B are quite certain that Bitcoin has entered a new bull market. A majority of retail investors also agree that the rally signals the beginning of the next bull market, which could take Bitcoin to a new all-time high. In a recent interview with the Paul Barron Network, popular macro analyst Lyn Alden gives her expert opinion on the rally and how it fits into the current macro environment. Though Alden is not completely in the group that we have started a new bull run, she believes the macro environment is just right for more impressive rallies. Whether it would continue or not, Alden says, depends on the U.S. Federal Reserve. We will now take you to Lyn Alden's video as she discusses the deep and insightful correlation between Bitcoin and global liquidity. Please take a little time to like this video, subscribe to the channel, and turn on post notifications so you never miss any of our regular uploads. Also, ensure you drop your comments in the appropriate section below. Everything you do helps with the YouTube algorithm, so we can continue to bring you these videos. Thanks and enjoy the video.
So Bitcoin is historically highly correlated with various liquidity indicators, right? So basically, how much capital is kind of available, liquid for investment. A lot of other investments, they trade off things like earnings, they trade off all sorts of other things, whereas Bitcoin is actually one of the purest liquidity correlations that are out there. And ever since autumn of last year, liquidity conditions have actually been, in many cases, moving up or sideways a little bit. Basically, they declined all throughout 2022. When you got to the end of the year, the dollar index came off of its highs. You started to get Chinese reopening. You started to get, the market pricing in slower forward Fed hiking. Inflation was off of its highs. You had a drawdown in the Treasury General account. It's kind of jargon for some, but basically, there's a bunch of things that improved liquidity. And I actually think that Bitcoin probably would have bounced in quarter four if not for the whole FTX implosion. Because you started to see a bounce in a number of risk assets. We saw good movements in precious metals, including ones like silver, that are historically more cyclical. And so I think that basically this is kind of a pent up move from those overall better liquidity conditions. So I think that's going to partially depend on how adamant the Fed is in trying to tighten in the face of decelerating data. I think in most market conditions, this would probably be like a top in the dollar, and we'd see more easing conditions from here. Like historically, for example, when you see the 2-year Treasury roll below the Fed funds rate, usually the Fed is done hiking. And so, these in normal market environments, these would probably start to signal a top. Now, because inflation is still historically high, because Jerome Powell has tied his reputation to getting inflation back down,
Right.
they could be a little bit stickier than they have been in prior cycles. So it's possible that we'll retest this. It's possible that we'll experience more turbulence. But I think this is at least the beginning of a rotation in liquidity, even if it's maybe not the final move. I think with the data we have at hand now, that's most likely. We recently saw, for example, industrial production came out pretty weak. We saw retail sales come out pretty weak. There's kind of broad-based deceleration. The New York Fed recession model is flashing recession. And so I think 25 basis points is probably the most likely scenario. Data between now and then could tweak those odds somewhat. Essentially, what we're seeing is that even though they're intending to continue tightening, they're intending to hold their tightness for longer. We are clearly seeing a deceleration of expectations around how much they're going to tighten, in large part because we've seen a deceleration in inflation and a deceleration in economic activity. So I think 25 basis points is most likely.
Do you think jobs are going to be a critical component for their decision making?
I think around the margins, yes, because for example, if you look at the Fed's mandates, they're not mandated to maximize industrial production, but they are mandated to maximize long-term employment, right? And so they look at basically employment and inflation as their two primary things to optimize for. By extension, they also have to optimize for financial stability. So, for example, if the treasury market goes illiquid, if the junk bond market, if that goes completely liquid and stops trading, they pretty much have to step in because that's going to start eventually cascading into failures of financial institutions and employment. But really, at the when it comes down to it, those two initial mandates are what they optimize for. And so the challenge is, of course, is that employment is a lagging indicator, right? So usually you don't get substantial increases in unemployment until you're already in a recession. It's basically coincident or lagging compared to other things. Now we can isolate certain aspects of employment that are a little bit more leading. So, for example, if you look at temporary help, um, if you imagine running a business and you're facing challenges, you're more likely to let go of temporary help services before you'd let go your permanent employees that have more experience at your company. And generally, so you see a lot more volatility and a lot of kind of a leading indicator from temporary help, both on the upside and the downside. And that's already negative year over year, the total
Right.
people that are officially employed in that type of work. And so even in the labor market, which is pretty strong, we still see early cracks. Same thing for overtime hours. That's like another leading indicator. It's looking pretty soft. But as long as they're looking at broad-based employment, I do think that they can use that to justify staying tight for a little bit longer than you otherwise would if you're looking at leading indicators.
During the interview, Alden also discusses the news of Genesis bankruptcy proceedings and how it might impact Bitcoin and the overall cryptocurrency industry. The crypto lender filed for bankruptcy shortly after it was charged by the U.S. Securities and Exchange Commission, SEC, with illegally selling crypto assets. Prior to that, Genesis had been having liquidity issues since at least last November when it paused withdrawals. Its parent company, Digital Currency Group, controls more than 200 crypto-focused businesses, including Grayscale Investments, which holds the Grayscale Bitcoin Trust. Many have expressed concerns that if DCG topples, it could negatively and significantly impact the whole digital assets industry. Here is what Lyn Alden thinks.
I think the biggest way it affects Bitcoin is how it affects their Grayscale trust, right? If this allows for redemptions, if this allows for a changing of ownership, if this gets stuck in a bankruptcy court
Right.
for a period of time, I think that's the biggest impact there because GBT is an absolutely massive holder of Bitcoin. More broadly, basically, I mean, they own large amounts of venture positions throughout the crypto ecosystem. Obviously, they're a major trading desk. But I think it's healthy to go through these cycles and clear out all these malinvestments because if you just always go up, of course you're going to get more and more leverage piled up. If you saw an investment that only ever goes up, the rational thing to do would be to leverage, right? If you were sure that it
Mhm.
was only going to go up. And so the only way that something can go up structurally is that it has to clear out a lot of that debt every once in a while.
Right.
And so basically, I think we still have a process to go through. If you look at historical Bitcoin bottoms, they usually, other than the March 2020 event, usually you don't have these V bottoms. Usually you go down, you crash, you
Right
capitulate, you go
there.
sideways for a while, and you correct both in space and time, and you clear all that out for a while, and then you start to build, right? So I
Mm.
do think that, even though we potentially have seen the lows, I still think there's time to go through before you'd see another just super strong kind of structural rally to new all-time highs.
What are your thoughts on Lyn Alden's interview and the recent crypto rallies? Do you think this is just a bear market rally or the beginning of a new cycle? Please drop your comments and observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos featuring interviews and tweets from some of the industry's brightest. Thanks for watching.